In this video, learn how we put together playbooks on our desk and some of the key components to every playbook we do. Hi, I'm Jeff Holden, Head of Recruiting at S&B Capital, a proprietary trading firm located in Midtown Manhattan, trading equities, options, and futures as automated and discretionary traders. In this video, we teach a developing trader during an in-depth trade review how to study a trade he has found edge in through a process we call playbooking our trades. We cover the important core components that go into every playbook and how we use those to try and compound our trading growth. Let's get to work on sharing this important trading lesson to help you grow your trading.
So what I ended up doing, it was Johnson & Johnson. So basically what I look for is I look for a strong earnings report that gets sold off in the pre-market, solely based off of pre-market earnings. I don't look at any kind of aftermarket or after-hours reports or anything. This is solely based off of the pre-market.
So it's names that reported that morning.
Correct.
Cool. That is really interesting because I've done some backtest stuff and I've never confirmed it, but there was somebody that I worked with at the firm, and I won't really talk about the backtest other than that. The difference between names that reported earnings in the morning and names that reported the day before, the responses were very different.
Okay.
And there were some sources of edge there. So don't undervalue that and make sure that I like the fact that you call out specifically what it is.
Yep.
This is not names that reported earnings. This is names that reported earnings this morning.
Yep. And that's why, I know obviously after hours we're looking at Netflix and Tesla, the biggest two, and they're going to have exponential moves the next morning when they open up. But what I started, this is kind of like that edge that we're developing, is that this is what I kind of picked up, and it has to do solely with pre-market earnings. So ideally I would look for a triple beat. However, in the bit database that I kind of looked at was that stocks eventually, if they sell off their earnings, if they do have a revenue miss, I would look for it to be less than 2%. Ideally, there have been stocks that have, say, like a 5% revenue miss, and they don't have the same moves. They would not fall into this setup.
Beat, miss, raise.
Correct.
Okay.
Yes. So, or issue, raise, whatever.
Yeah.
So basically with J&J, they reported a 10.6% beat in EPS, 1.6 miss in revenue, which fell into the 2% or below, and they ended up raising guidance. For the parameters of the trade, I look for higher than 1 million shares for an average of 20-day daily volume. And so for me, on what I look to after the sell-off in pre-market, ideally, just because for me personally, I'm not the best off the open trader. So that's why I would look for a strong push up for a retracement back to VWAP for an entry. However, specifically with J&J, there were certain levels that I had marked that did reach that, key levels that did break. So I did end up getting into it off the open. And then basically I set a stop loss, you'll see going into the next few charts. After J&J had their sell-off, they did kind of recover a little bit, and that recovery I saw as 160.5 was a support area. So I had my stop loss at the 160.5. Reasons to sell. So for me, I usually like to look just for an ATR move. I ended up getting out roughly about 1.37 ATRs up from the open. Ideally, one thing I kind of need to, I think, kind of improve on is that with earnings, I kind of believe that there could be stronger than normal moves. So I kind of got out of it a little too quick. And with earnings plays, that's kind of one thing that I noticed, is that you could have a stock that goes up 4 ATRs in the day. But so that's one thing that I need to improve on, is to not just aim for that 1 ATR move. Expect that there could be a potential higher move than that.
What you've defined here is a really good trade that potentially has a lot of edge, and you're just scratching the surface of what it could potentially be. There are traders who could probably make their career in this trade. Maybe not this trade, but maybe this would be one of 3 or 4 trades. So if this is something that makes sense to you, if there's changing news in a company, earnings, then you can go back and you can actually study at the end of an earnings cycle every stock that fit that criteria, and how did they respond?
Yeah.
And then you can build a playbook around that, where you're not building it off of what you've seen once or twice, you're building it off of what you've seen historically. That would help you develop your reasons to sell quite a bit, because the reasons to sell, yeah, one ATR, that's great.
Yeah.
But if it's going to go 4 ATRs and you're risking half an ATR to begin with, you
not 2 to 1, yeah.
might as well just hold on for the 4 ATRs potentially. But you may be at a point in your trading journey with us that you haven't seen enough reps to really get that feel for it's up in ATR. You know what? This is feeling right. I'm going to go for 2 ATRs or 3 ATRs or 4 ATRs. You also haven't had that enough of those experiences of it's an up in ATR, I'm going to go for 2 ATRs and then it stops you out.
Yeah.
Those happen too. But the more you can learn from these, and the more you can study this exact specific play, the better you can get at executing that. And the play in itself isn't that criteria, it's the fact that you've defined what the criteria for a potential trade is, and then you've defined the levels that you'd be interested in, so you've created parameters around your trade, and then you have execution steps. So it's those 3 things that are the commonalities that you want to study for every playbook. You want to define what the play is, which you did in the trade thesis. So the play is that it's sold off pre-market, so it has earnings that day, it at least does a double beat, maybe a triple beat, and then they sell off in the pre-market. You can look at all those examples and you're probably going to see 10 or 20 different price action behaviors. And then you can, if you study all those examples, identify enough price action behaviors, then you can figure out the ones that really make sense to you. You've already done that with the parameters of the trade on a break of key levels or a retracement back to VWAP after the opening drive. That's one example of what you could see. We talked about you could maybe see 10 or 20. You want to get to the point where that one example, maybe there are 2 or 3 examples off of that same idea that you can execute with confidence and with edge. The other way to do it is just say, this is my one example, and I am not going to miss this one example. So every time I get that set up, I'm going to be looking for this one example, and I'm going to execute on this one example. And here are my execution rules for that.
Okay.
You've done a really good job of doing that in this trade without actually doing that.
Okay, fair enough. So just some fundamentals backing everything. I like to, no matter what stock, whatever setup it has to do with, I like to check some key fundamentals I like to look at, which are it's the float of the stock, what's the short percentage of it, the average 20-day volume or the average daily volume over the past 20 days, the ATR of the stock. Solely relating to this kind of setup, I like to look at obviously the expected earnings and the reporting earnings, and then I calculate it into what kind of a percentage it is. So with J&J, obviously the earnings expected EPS was 235, came out to 260, which was over a 10% beat.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Revenue 23, spot 72 billion for expected. They missed that by 1.6%. However, they raised full year guidance. So because of that double beat, it was a low percentage miss on revenue, which I didn't believe to be too big of a factor.
I mean, they had a significant earnings beat on less revenue,
Correct.
right? So they're making more money on less money.
Yes, and they raised guidance.
That's pretty good.
Yeah.
It might not always be good, but that's pretty important. If you're looking at that one specifically, that's pretty interesting.
And that's why in the database that I have, out of all the stocks so far, it's like what I've seen is like 2% has kind of been that level for revenue miss.
Anything
where if it's
more
2%,
than that is
anything
okay.
more than that
Interesting.
has not been beneficial. So going on the daily, I just wanted to just show the daily chart over the past however long since the past year. I was looking at it. The second red line right here I was looking at that. That's 166. So I was originally looking at that to be a breakout trade from the week of September 20th to the 25th. So that was basically, it kind of just contested that area, but it never actually broke through. So I was playing it as a potential day one green day. Looking at it, ended up being just a sideways day two. Today we did not break that area. But that was one key level that I was kind of looking at, was 166 following. And obviously before I had no idea because we opened up at 161. But that was just one thing that I was kind of looking at for not just an intraday, but a potential swing trade as well. Looking at the pre-market, but off the 1 minute, I took off 3 different key levels that I was looking at. So when the earnings originally came out, it kind of gapped up and it hit roughly, I just did a key level of 163. And then after the sell-off, it got down to 158.75. That was the low. However, once we hit this, it started to recover. So then from the recovery, this high right here was 161.77. So that is kind of my pre-market high after the sell-off that I was looking at.
There isn't a ton of volume done there.
Correct.
So, it looks like there's more volume done on the opening candle than there was in all of pre-market. Just take that into account, because if there's really no volume done, then those prices aren't as potentially relevant as they could be if there was a ton of volume done in this stock. It doesn't change the trade. It's just as you're looking at charts in the pre-market, we talked about the one this morning, you don't want to overvalue price action in the pre-market when it's on no volume at all.
Correct.
And so that's a good thing to define the levels. It's even better when you can define them with
Conviction for
relevance.
volume.
Yeah.
So going into it off the open, we ended up getting a first strong move up. I ended up getting in, I'll have to go when we get on the execution chart, but I got in at the break of the technical quote unquote pre-market high from the recovery. And then I ended up buying in on this retracement back down into 160.6 is what I ended up retracing into. That's where I entered in. And then I ended up, you'll see I quickly panic sold into this strong move up here.
What percentage of your size was that?
It was only like 15 to 20%.
So
I just took some profit on it. Didn't really.
You might want to study, is that something you want to do?
Yeah.
If you want to be selling 20% in, there's nothing wrong with that. Defining the percent of how much you're selling is a really good habit.
Yeah.
Versus just saying, I'm going to kick out 50% right away.
Yeah.
Then all of a sudden your risk reward is very good.
Correct.
But if you're someone who wants to scale out, then defining either linearly or exponentially or kind of intuitively how you're going to scale out, that's perfectly fine. There's nothing wrong with taking a scale out on a trade, because there are going to be times that it's going to go up, you'll not take anything off, and it'll come all the way back down.
Yeah.
So determine for yourself if you're the type of trader, and you can use your playbook as an opportunity to do that. Am I the type of trader that wants to actually hold for the big move, or am I somebody who is very comfortable taking profits along the way?
Going more further into it, at 9:38, we ended up breaking the pre-market high from when the original buying became after the report came out. So just wanted to put in some key levels here. One ATR move from the open was at 163.17. These would eventually be the two areas where I sold out of exiting the position at 164. At the time, looking at it, just because, which is what I say I need to improve on, I ended up getting out of 80% right here at 164. And that was because I was realizing that we were already almost an ATR and a half out completely from the open. I was originally looking at it, I didn't expect to get up to 165. My best, when I was looking at it, I was expecting 164.5. So at the point to me, I didn't think that we were going to be able to go higher. However, we did.
But those are arbitrary.
Yeah.
What's your real reason to sell here?
So when for me, I usually like to sell on strong pops up, at least an ATR above the opening price.
Perfect. So that's a reason to sell.
Yeah.
So then you can take it a step further and say, what's my criteria for selling here? And then you can take it a step further and say, what's my criteria for potentially adding or holding or adding back? These are all little elements of this trade that you get to review over and over.
Yep.
And it's not really about this trade, it's about the process of making these trades. Because this is very clean. And so it's easy to say, I sold at 164 when I should have held to 166.
Yeah.
Because it's a very clean trade. Most trades are not this clean. So it's a good one to study because you can review, okay, what does it mean, when we're above 163 and the speed at which we got above 163 and the way we got above 163, what does that mean for the trade? Does this mean this has the potential to trend all day? If it has the potential to trend all day, that's ultimately, the term on the desk now is RSW, but it's ultimately a relatively strong stock that potentially could trend all day and into a multi-day move. So if that's happening and you're in from really good prices, you're not going to want to be exiting, or if you're going to exit, you're going to exit into that momentum and look to rebuild shares at lower prices, looking for that continuation. So that's even a step, taking this a step further of, are you in this trade looking for a potential multi-day move? Or are you just looking for an opening drive trade? Because what I see is you made a really good opening drive trade. And what I hear you saying in this specific circumstance, what I hear you saying is you have edge over every other fundamental analysis, every other firm out there to know that if that specific setup occurs pre-market, and then it gets above a level and it determines that, you have a feeling that it should go for multiple days.
Yep.
The only way stocks go for multiple days is if there's buying for multiple days. So you have to be really careful about identifying what trade specifically you're making, because it could be you have a tremendous amount of edge making this trade before 10:30, but you don't have any edge if you try and hold this trade all day.
Fair enough. And that's one thing when I was, that's one thing I have to look back into is how these stocks react after a day one play.
And I would even get more granular than that and react the first hour.
Okay.
You're not even an hour in before you're taking profits, and I don't think there's anything wrong with that if you're making an opening drive trade.
Right.
But if you're making a multi-day trade, that's a very different set of parameters and risk levels, and that's also a different set of reasons to sell. So in your playbooks, you should be thinking, what trade specifically am I making? Not necessarily, did I make a trade that made money? Because I like the idea of this trade a lot, because you've identified something that you can test and you have execution rules around it. But don't try and make it more than it needs to be.
So going on to the 5-minute, I liked how there started to be some sell-off as soon as we hit the high of 165.15. However, it did break below VWAP, but the pre-market highs
But again,
held.
do we know if this is an opening drive trade? In which case, we don't even need to look at the rest of the day.
Yeah.
Or is this a trade you want to hold multiple days? So studying this a little more and identifying this playbook a little bit further could be something that's a tremendous amount of edge for you. There are traders on the desk who are just interested in making multiple day trades. That's great for them. If that's what they're interested in and that's what they spend their time on, then they're going to think about, does this set of circumstances, this earnings beat plus pre-market, down in pre-market plus a break above resistance, does that lead to a multiple day move? I don't want you to ask that question first. I want you to ask the question of, does this lead to a 1 hour move that's predictable? And what do I need to see in order for that 1 hour move to be, to showcase edge? And then you can determine, hey, is this something that I might want to be looking at for a multi-day move? But if you're trying to do both, there's a better chance you're going to get lost in the middle, and your execution rules will be off, and the type of trade you're making might not fit all the time. And growth is like compounding. It's not linear. So if you're compounding this piece of information and that piece of information and that piece of information over time, you're going to see better results than if you're trying to do it all kind of in one swoop. So I don't think we need to even care about this chart for the trade that you're discussing.
Okay. So I got in executions here.
Yep.
These were the entries at the prices. So basically, like I said, on the break of 161.77, I ended up getting in 12 cents higher, and then on the retracement quickly thereafter back down to 161.6. Like I said, took a little panic sell there at the drive up after that. But then once we got the break of the pre-market highs, I bought in at 163.42, and then again on another retracement back down 20 cents lower into 163.21, and I would hold those until we got up. Once I was realizing, I was like, okay, shoot, we're already higher than an ATR above the day. I ended up getting out of that first 80% right there at 164. I think personally, I was too quick to judge, and so I ended up getting out too quickly, and should have say maybe done 50% instead of 80%, and then just go from there.
We'll find out. We can study this trade. You can study this trade, and you can share it with me and share it with the other traders on the desk, and then in the morning meetings you can call out these trades, and you can study. Is it a consistent 1 ATR profit? And if it is, that's a lot. That's how much a stock typically moves in a day.
Yeah.
So if you can size that well and manage your risk well, 1 ATR is nothing to kind of scoff at.
Yeah.
But we don't know enough at this point to be able to determine, is that the right thing to think about?
Right.
Because it may be that this sort of move is something that lasts a long time, and it may be that this sort of move is something that's consistent for 1 ATR. So let's just study it and stay with it a little further, and we'll see. You can do more playbooks on these, and you can develop better reasons to sell in these. You can kind of get a little more customized, but I think you have a really good base. It's just being very specific about what you're trying to do and being consistent with doing it.
Okay, and I would say like what I was looking at in the database, I keep on referring to that. What I have is, because I started to look at that, was if it could be a potential swing trade, or if it mainly just has that first initial opening drive, and if it would be an intraday trade. I'm kind of leaning towards right now that it would be more of an intraday trade. So for me, what I was looking at, I took basically, there's different ATR levels that I took to see what was the ATR movement from the opening price to the high of day, what was the ATR from the low of day to the high of day, so kind of just going all from there to kind of see how high of an ATR move that we got from both the opening drive and from the low of day to the high of day.
Yeah, that's
so
awesome.
That's why there's different kind of not parameters, but different kind of levels, I guess, that you can see, okay, what stocks, how did they do? Did this go up 2 ATRs, and then did it sell off completely and only end up the day 1 ATR in the day?
Yeah.
So that's kind of what I was trying to dive into more, to kind of research to see how these kind of stocks reacted to that kind of movement.
And what's fun about that is you can try a lot of different things, and you're not having to try it with risk on.
Correct. That's true.
So the fact that you guys are here and you can talk to other people and you can get the resources, and you can talk to some traders who are like, I think that's the dumbest trade idea I've ever heard. And there are traders who are going to be like, that makes absolute sense to me. There isn't a right or wrong answer, but if you can find ways to make money consistently, keep going.
That's all that matters.
Keep going.
I believe that I was not in large enough for this. When I was talking to Jonathan yesterday in pre-market, or 2 days ago when it first came out, we both looked at each other and we just said, we're like, J&J? And I was like, yeah, J&J. Just because we both saw it. It's something Jonathan and I always, this is one thing that we kind of started looking into. So I knew right away that this was I think it was the most conviction stock that I had. And then looking at it, I was like, I didn't get in large enough, and I should have. So yes, was still profitable on it, but not to the point where I could have been. I felt really confident.
If it's your A+ setup,
Yep.
that you can make your day in a really good A+ setup.
Yep.
And your A+ setups will evolve, and but you want to start growing in that, and so you want to be comfortable putting on risk in that. And a part of being comfortable putting on risk in that is recognizing that urge to panic sell out and catching yourself if that's not your trade plan. And so it's coming up with a trade plan and understanding where you want to exit. And for some people, doing the back testing of understanding where they're going to take their first exit and the second exit and third exit, it's a really good way to do it. Other people, it's kind of more intuitive thing, but that's a part of of the larger size idea. Is even if you get larger size and then you're kicking some out, right away, you're not really helping you. You're just increasing your risk. You're not really increasing the payout of the trade. So make sure that you're kind of thinking through not only putting on the risk, but holding that larger size for longer.
Yep. And then, yeah, same things. The second key thing I took away was expect the larger moves. Just because with earnings, you can see larger range expansion. A lot of these setups, basically, a lot of the stocks have been moving greater than an ATR a day. So even though my thought process for an exit was to sell on strong pops up with volume, like 1 ATR above the open, you can kind of think, okay, well, now because it's an earnings trade, that maybe you can expect instead of a 1 ATR move, you think 2 ATR moves, and then you can get out a little later. And then same thing, don't get out of the full majority of the size. And then one thing I wanted to kind of just compare was just the ATR movement from the previous earnings compared to the other stocks in the database. Like, did this specific stock compare the earnings? What was the EPS and revenue either beat or miss? Did they raise guidance? What kind of an ATR move did they have that previous earnings day? So going back into it, not this last earnings, but the 2 earnings before, for I think it was quarter one for J&J, they ended up having, I think it was like a 3 ATR move on the day, and it was very similar earnings as well. So that could have been like, okay, knowing that, instead of getting out at 1.37 ATRs, I kind of know, okay, maybe I can kind of base it off of a 3 ATR move. So that's just something that kind of take into consideration.
It's good. It's something to play around with. I really like the work that you've done to put together a playbook. You certainly can clean it up quite a bit. But the things that I think are really good that you did was you identified a specific set of criteria, and it doesn't have to be earnings criteria. It can be a stock that's in play. It can be a PayPal with the specific criteria of potentially they're taking over a company and it's a large acquisition and it's kind of outside their wheelhouse to begin with that they're taking over. So you could playbook that from today. You could playbook the DWAC or whatever it is from today. That's a specific set of characteristics where you've got a very well-known story with a ton of volume, and it's the first day of price exploration. So those 3 things all put together one story. All you're doing in this playbook is you've put together a story, which is really good because you've defined it. Then you're identifying your execution rules, which is really, really good. And then you're reviewing, how could I get better at this? That is what a playbook is on our desk. It's defining a very specific set of criteria. It's setting execution rules around it, and then it's reviewing your performance and then discussing, how could I have done better next time? Do I need to change my execution rules? Do I need to change my entry criteria? But that's what that process is about. It's not about putting up charts and saying, look how great I did. I think that we kind of get lost in that sometimes. It's really that process that you want to focus in on, and that's going to look different for every trade that you have, and that's okay.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.